Hi, this is Brian Decker with themortgageguy.com. I wanted to take a couple minutes and just give you a couple quick facts or important pieces of information. The first is relating to HERO loans. Now, HERO is a type of energy efficient loan that is given to buyers that obviously is attached to the actual property taxes on a particular property. We've been able to get around HERO liens on property by subordinating them or not having to be paid off. However, unfortunately, starting in 2018, FHA passed the new mortgagee letter. No HERO, never will be allowed on any future FHA loans. So if your buyers are going to be using FHA financing to buy a property that has HERO on it, it has to be paid off by the seller or by the buyer. No ifs, ands, or buts. That's bottom line. Now, conventional financing has kind of come out and handled it a different way. Now, PACE loans or energy efficient loans, there's many different types of them, many different companies that have done them or institutions that have done. We deal with HERO most commonly in Southern California. Well, the problem is Fannie Mae and Freddie Mac have come out and said, well, hey, HERO, if you detach your lien from being actually included in the property tax assessment, we will allow these liens to actually be subordinated, or you do not have to pay them off. We can transfer them from the seller to the buyer. The problem is HERO will not detach themselves from the property taxes because that's their assurance of them getting paid. They go ahead and they actually attach it against the property, so when the client pays their property taxes, they're going ahead and paying the HERO lien. The problem with this is, and why all these types of loans do not like this is, if a client defaults on their mortgage, the property taxes are paid before the actual bank gets their money. So if I foreclose on my property, any of the county or state or federal tax liens that are on that property get paid before the mortgage actually gets it. So they take a senior position to our first mortgage debt. So what ends up happening is when HERO is attached to the property taxes, it would be paid off before the first mortgage got their money back. This is not okay, and that's why they go ahead, and so many now of all these mortgage programs that used to allow these have now come to realize what is actually going on and ban them. So you can use HERO on a conventional loan, but HERO must detach that from the property taxes. So it's a total catch-22 because HERO won't remove them from the property taxes. So in all case in point, no HERO on conventional loans, no HERO on FHA loans going forward. The other thing I wanted to make quick note of is the market's actually seen quite a bit of an uptick in interest rates. This is long overdue and long expected. We've seen great growth in retail sales, great growth in GDP, great growth in the actual stock markets and the equity markets. So we have basically our risk on trade is on. People are dumping their money into the stock market and they're fleeing out of the safety of mortgage-backed securities. This is causing our treasury yields to move up and also our mortgage-backed security yields pushing up. So as mortgage-backed security prices, we're seeing them obviously drop. Therefore, it's rising interest rates. We've got to offer institutional investors higher rates of return for them to jump back into the safety of mortgage-backed securities. So I hope you guys like that quick update, and you have a great weekend.